Have you ever met a successful business owner who says, I love spreadsheets and financial reports? I didn't think so. For most entrepreneurs, the financial side of the business is often the most confusing, intimidating, and sometimes even avoided part of running a company. But here's the reality. If you don't understand your numbers, you're essentially flying blind. Welcome, or hopefully welcome back to The Reluctant Entrepreneur. My guest today, Justin Boyd, has spent more than 2 decades in finance and accounting, helping businesses make sense of their numbers and use them to make smarter decisions. Today, he works with entrepreneurs as a fractional CFO through his company, Flow Copilot, helping business owners transform financial stress into strategic clarity. Justin specializes in helping small and mid-sized businesses understand their financials, improve cash flow, and build strategies that support sustainable growth. Today, we're going to talk about Justin's entrepreneurial journey, how he made the leap from the corporate world into business ownership, and why understanding your financials may be the single most important skill an entrepreneur can develop. And it all begins right now. Stick around. Justin Boyd, welcome to the show. I am particularly excited to have this conversation today, based on the subject matter.
Yeah, for sure. Yeah, I appreciate you having me on. Always fun to talk about for me.
Yeah, we titled this episode "Cash Flow is King," and in the real estate world, if you were a realtor, obviously the 3 most important things in real estate are location, location, location. And
Yep.
I think in business world, no matter the business, the 3 most important things are cash flow, cash flow, cash flow. Right? I'm sure you've heard that a bazillion times, but it is true. And cash flow messed with my head for years when I started my business 34 years ago. Basically, I didn't have any, so I had to force it at a high cost. But anyway, we'll get down that road. Before we get down that road, let's start at the beginning. Before launching Flow Copilot, what were you doing professionally, and what led you into this A, crazy world of finance, and B, crazy world of entrepreneurship?
Yeah, that's a great question. I didn't really know. I didn't really have a plan since I was younger. I knew that I liked dealing with money and numbers. I was always good at it. I get made fun of a lot because my favorite game was Monopoly growing up.
Were you one of those ruthless players?
Yeah, a lot of that. I always wanted to be the banker. I liked counting the money. I liked having my hands on the money. It was interesting. But yeah, I was like, I definitely wanted to win. It was competitive as well. But I always knew I wanted to do something with that, something in business. Didn't really know. By the time I went to college, I went for business, went for finance and accounting, and didn't really know what it was going to lead to, I guess we'll put it that way. So my first foray into the financial world was more of a sales job, I would say, working with individuals and small businesses, helping them with their actual investments, doing investments, doing insurance planning, things like that. And there was an aspect of the planning side of it, the forecasting side of it, that I really liked, putting together that plan. So they wanted to focus more on sales and train you on sales because that's what kind of organization they were. But I was really more drawn to the planning side of it. So I did that for a few years. I ultimately migrated to a role that I had created sort of for myself, where I didn't like the sales as much, but I wanted to help the other reps with their presentations and their planning. So I sort of naturally gravitated toward that, and that was a really good fit. And then there was a couple other, random sales jobs in between there, random financial jobs. Ultimately, my longest tenure was with IBM. I was there for about 11 years doing corporate finance. So a lot of FP&A. I got into pricing strategy for about 7 years of that, doing Systems E mainframe server pricing, developing the strategy for North America. How are we going to sell these multi-million-dollar servers, working with business partners to sell through them. And that was really a ton of fun. There was creativity involved in that. You were still working with salespeople and supporting them, but it was, hey, we got to protect our profit, and we have to be creative in different offerings. How do we increase sales? How do we increase profit? How do we deal with special bids that come in for these ginormous deals? That how can we be creative and have it be a win-win? So that was really interesting to me. And sort of at the same time, I was starting to. I had a lot of not natural acquaintances and friends that were business owners. I started to join mastermind groups because I knew I was more entrepreneurial. I just didn't know what to do with that, or
Hmm.
anything about that. So I was like, I just need to surround myself with people that have that mindset, because I wasn't raised that way. I was raised to be a good corporate soldier, go to school, be an employee, stay at the same company for 35 years, like my dad, my grandpa, my brother's doing. And so I didn't have a lot of guidance or motivation in that direction. Or I had internal motivation, but not a lot of, external motivation. So I started networking with them, not knowing what it would lead to. And sort of through that, I just found that there was a lot of business owners that really didn't understand their finances. And I was like, well, I understand a lot of these things very well, not so much to the small business owner,
You're the guy.
but
You're
just,
like the kid in the back of the class going,
yeah,
pick me. I have the answer, right?
exactly. Yeah, exactly. Yeah. Can I help you with that? Yeah. So it was, and at the same time, I was helping a buddy of mine start a bookkeeping firm. And so I was delving into a lot of bookkeeping. I helped him onboard a lot of really messy clients and figure out his pricing strategy and all that kind of stuff. And so it was really, I really found that people had CPAs, they had bookkeepers, they had trusted business partner friends, and, in their masterminds and things like that that would give them advice. But they had a marketing person, they had all these things, but they didn't have a financial person. And I was like, this is the number one struggle that I see people dealing with, besides employee management and things like that, which is a whole different thing. But financials are the most important part of your business, specifically cash flow. And these people don't have someone in their corner that's helping them navigate that. And CPAs, we're still in a world where a lot of CPAs are old school. They're focused on returns. They're focused on, okay, what's done is done. Let's deal with it the best we can. They're not as proactive and forward looking. Bookkeeping is very, backward looking, historical looking. And there's no one creative. There's no one helping with pricing strategy and cash flow. They sort of understood their P&L, but they just didn't have that seat filled. And so that's kind of what started it all.
Interesting. What
Yeah.
you did that was fairly unique. I've talked to obviously an awful lot of entrepreneurs, and very few seek out advice until their building's on fire. So consultants, mastermind groups, things like that. I
Yep.
consider them sometimes to be the fire department, and
Yeah.
and you called them out before there was a fire, so they were more preventative, and which is at least in my world, unusual. I did
Yes.
reach out for some mentorship at some point, but my building was on fire. I was standing
Yeah.
on the window ledge, just ready to jump, and
Right.
and you did that early, which is unique, not that rare, but a little bit more on the unique side with entrepreneurs. To your credit, because a lot of entrepreneurs have maybe perhaps a slightly oversized ego and sense of like, I can do it,
Yep.
hold my beer, I can get this done, and maybe they can or maybe they can't, but we kind of tend to figure it out as we go, and you definitely took a different approach to that, which is good. We all do at some point. You just decided to just do it earlier. So
Yep.
was that always kind of how you were wired to keep self-educating or educating yourself along the way? Kind of proactively.
I would say yes. I I was never comfortable sort of sitting still. I always wanted to fiddle with things. And again, I would say the thing that I was the worst at is having a long-term plan and having goals, like long-term goals for my career. It was kind of like I was always like, what do I want to do when I grow up? And I just,
Yeah.
I liked trying different things. I like to see what I didn't like, and I think that was a good piece of advice, was just try a bunch of stuff, and crossing things off the list is almost is better than sitting around and waiting for that big aha moment. It's like, just go try some stuff and say, okay, I tried this kind of job, this kind of company. I liked this. I didn't like this. Okay, then you take that to your next thing. I like this. I didn't like this. And so I got to a point where, yeah, I do get rather bored sitting and doing the same thing. I was always, even at IBM, I was innovating. I taught myself how to code Excel VBA, and I was creating templates and sadly putting people out of jobs essentially because I was like, well, you're just moving information from the here to here, and hey, let's figure out a way to automate that. And ended up creating some templates that got rolled out worldwide to some of our finance teams, which is really cool. But it was the red tape, the slow movement. Hey, I find issues and I know how to fix them, but now I have 7 executives on the call and they all don't agree, and nothing ever gets done. And so it was kind of that not wanting to sit still, and also knowing that I had more to give and I wanted to be a little bit more in control of the outcome, and just like, if there's this problem, let's go fix it, right? Let's move on it. So I wouldn't say that I'm a crazy book reader and about business and things like that, as much business strategy. I have some friends that are like that. They're doing acquisitions and they're more that geared toward that. I was always more driven toward optimization. How can we cut out things that we don't need to be doing, or the things that we do need to be doing? How can we do them faster? How can we add more value? How can we really just simplify people's lives and automate as much as we can? And so with the financial angle to that. So to that extent, yeah, I've always been interested in learning about, now it's AI, optimization, different things like that, to make people's lives better and make things easier, because especially in the financial world, people get overwhelmed. I mean, there's a lot of emotional feelings to it. To your point, what we deal with is people waiting too long to reach out to get help, and then or they're overwhelmed with it, or they're embarrassed about it, and it's so much, and there's not been a lot of revolution in terms of helping people with their financials. So we're just trying to make it easy, so people can live better lives. Ultimately. Yeah.
Starting a consulting or advisory business is very different from working inside a company, right?
Yes. Yeah.
You're signing the other side of the check, and
Yep.
that's just the beginning of the changes. What were some of the biggest challenges you faced when launching your own business? Maybe that you didn't expect, or maybe that you did expect and you were prepared for or not.
Yeah. Yeah. So I was probably stupid looking back, but we decided to move to a new location, move out of state at the exact same time that I started my business. And so we took on, my wife leaving her job. We traveled a lot with the kids. We were making a lot of changes at the same time. And so looking back, I probably would have done that a little bit slower and more meticulously. But I would say, besides that, personally, the biggest challenge, especially in my type of business, is I'm more or less the product. So when you get rejection, when deals don't close, when people don't like what you have to offer,
It's personal.
you take that. Yeah, it's very personal. And so it took me a while to work through that. And I had to really dive into that to say, okay, separate out, okay, if someone says no, or if something doesn't go well, how much of it is me versus my product, right? And as the business owner, it's hard to separate, because even if it's the product, it's still your fault, right? So you still got to deal with it. So that emotional side of that was tough. Fortunately, I did have a lot of experience in different areas, and I can see now, although I started the business, in my 30s, when a lot of my buddies started it right out of college, I can point back to all of the things that I learned in different jobs and how they're benefiting me today. So I use sales today. Even though I didn't like being in a sales job, all those skills that I learned are helpful today. Everything I learned at IBM about pricing strategy, financial planning, budgeting, forecasting, I use all that today. And then other, different random jobs, the bookkeeping, helping my buddy start that. We use that today. We do bookkeeping, and I help, manage that. So pointing back to all those things and how they, came together is a pretty beautiful thing. But definitely the emotional side, and definitely, not having run a business, I got to deal with employees and workers' comp and all this stuff. And it's like, I just want to deliver a good product and help people out, like I don't want to deal with all this other stuff. So that was definitely challenging.
Yeah, I've long said jokingly that I would have the perfect business if it wasn't for customers, vendors, and employees. Right? It'd be great if it was just me. You mentioned that it was a slower start than perhaps you envisioned, and dealing with employees and vendors and all that. Were there any other lessons you learned about entrepreneurship that you didn't expect? This far in.
Yeah, I mean, I would say from an encouragement standpoint to other people, it's not as hard to start a business as you think. So if you're one of those people like me who's very risk averse and, in the financial world trained to spot all the problems and, things like that, you can get paralyzed and you can find all the reasons why you should never do it. So one of the things that stretched me and that I would encourage other people is it's not as hard to start a business as you think. And so even with my kids now, it's like, hey, find something you like to do and let's start a business. Like, it's not that big a deal. You don't have to have every single thing figured out before you take that step. So that's a big thing that I learned that actually encouraged me. And then from a time management standpoint, from a workload standpoint, I really like the book Who Not How, and that's a big thing that we talk about in our mastermind is don't spend all of your time figuring out how to do everything yourself. Find the right who that already knows how to do it and put them on it, right? Invest in that. And then you focus on what you do the best for your company, because it's not the best thing for your company for you to wear all the hats. You sort of have to at first, but as soon as you can get people in those different seats that can fill those roles and you can focus on growing the company and where your strategic value is, definitely leverage other people's talents, people that have done the things already, and put them into those seats. Don't try to spend 17 hours learning how to do something that you can just hand to a marketing person and they can do it and in their sleep. So that's a big lesson that I learned and I still try to follow through with today.
A lot of entrepreneurs avoid their financials, and when I say a lot, I'm the top of that list, because they find them confusing or overwhelming. I remember I understood from a basic level the income statement. I looked at what's coming in, what's coming out, and gross and net profit. I did not understand balance sheet. Balance sheet was a giant buzzkill because I would look at the income statement and go, hey, not too bad, not too bad.
Yeah.
And then my accountant would go, oh, well, look at the balance sheet. You're actually losing money. I'm like, how? Don't even show me that. I don't want to see it. I really don't want to see it. And then they'd show me cash flow projections, and I'm like, well, what are those? And 'cause I was very naive when I started the business and very technical, a good engineer, but sucked at business in terms of knowledge. And to me, many parts of the financial statements were inconvenient truths, and I didn't want to hear them. I survived completely in the first several years of the business on cash flow, not well-managed cash flow, manic cash flow. I've said this on the show many times, but we basically had a Ponzi scheme going. Only the victim was me. I was the customer and Bernie Madoff all in one, right? So we were just, we have to cover payroll next Thursday. Okay, bring in more cash. I'll bring in more cash. None of it profitable, Justin, but my concern wasn't profit that day. My concern was payroll that day, or my concern was the rent that day, or whatever. Name your multitude of cash out, and we survived several years on cash flow. You mentioned earlier, or we were talking earlier about cash flow being one of the most important things in business, and cash flow can even get you around a profit issue. Not for long, because at some point, the pyramid runs out, right? All I cared about was bringing enough cash in to cover that week's commitments. And once I kind of switched over to, okay, we kind of need to make this profitable cash flow, right? We just can't keep digging a hole. And then, because the burden to bring in more cash to cover that giant hole just kept growing.
Yep.
Do you see some of your clients in that same position where they're just chasing cash and not actually running their business?
Absolutely, 100%. And that's you're the rule and not the exception. I'll put it that way. So
I feel a
yeah,
little better.
if that makes you feel better. But yeah, I would say, most business owners are very comfortable with their P&L and they live and die by it. So it's the exact same thing. Same, income statement, P&L, same thing, right? And it was interesting because, going through the education, the finance and accounting education, there was sort of an arc where the more you learn about corporate finance and accounting and all this stuff, your brain starts to go and like into this world where cash doesn't seem real, where it's like, oh, I just need to understand general ledgers and all this, that, and the other thing, and there's a lot of different ways to manipulate it. And it was even in college, I was like, what is this cash flow statement and why do we care about that? Like, I thought we just got into this universe of fictitious numbers on books and, valuations and all this stuff. And at the end of the day, it all still comes back to cash. It doesn't matter how big your business is, right? And so that's actually why we renamed our company Cash Flow Copilot, because that's the most important thing. So you will have people that say, the balance sheet is the most important statement. And I can't argue with them. The income statement is basically a bridge between two balance sheets. But I really have a liking and has sort of gravitated toward cash flow statement being the most important thing, because you can look at all the statistics about 80% of businesses fail, small businesses fail because of cash flow, and it's most people that walk in the door are making decisions based on how much cash they have in the bank at that point in time, or a gut feel of this just feels right, or I need it, or we've done this before and survived. So that is 90% of the decision making. And so we try to take that and say, okay, we definitely need to focus on cash. We need to educate you on where every dollar is coming in and out of the business. We need to talk about what of that is healthy and unhealthy cash, to your point. And then we need to help you make decisions based on real data and projections of where we're going, and when it makes sense to invest. And when we do invest in things, how do we do it the right way? All those kind of things. So it is really focusing on cash. It's really focusing on the future. And it's really taking the emotion and the gut feel and the knee-jerk stuff out of it. So we're not in that situation where we're like, hey, we got to make payroll. How are we going to do that? We already have a plan for that, right? So that's definitely a common thing that people walk in the door with. And unfortunately, they don't come see us when things are good. And like you said, they wait till things are on fire. So that's the world we live in. I don't mind it because I know how to get people out of it. But I just wish that people would come in sooner and not have to put themselves through that, to begin with.
Yeah. When we think of businesses that fail, they go bankrupt, we think that they just ran out of profit. And there are businesses, plenty of them, that end up going bankrupt profitably. They just didn't have cash. And
Yep.
that's so frustrating to think about. It's one thing if they just, if it cost them $100 to build something and they sold it for 50. Yeah, they're going to run out of cash. Maybe,
Yep.
maybe not necessarily, but they'll certainly run out of profit, and that'll kill it. But you can be profitable and manage cash so poorly that it sneaks up behind you. It's a rattlesnake in the grass, and I've had that. Fortunately, it didn't kill the business. It nearly did, almost killed me. But where we were profitable on paper, if everyone that owed us money paid us, and we paid everyone else that we owed that same day, if we had this matching principle down to the hour, we would clearly be quite profitable. But one of the mistakes I got myself into is I thought the solution to every problem was more sales. We just need to grow. We're too small. We need more business. And I was pretty good, as most founders are, at beating my own drum and selling the product. And I was literally traveling all over the world, hyping our stuff. And I was bringing in orders like crazy. We were growing faster than our cash flow could keep up. We're a factory. We build equipment. Our lead times at that time were about 6 to 8 weeks, and we didn't take any down payments back then. It was just all whatever. And we sold machines that were worth tens and tens and tens of thousands of dollars. So we had a saying in our business. It was comical, but it was truth to it. We have good news and bad news, Justin. The good news is we got another order, and the bad news is we got another order. Right? Because where do we get the cash to build it? We know when the cash comes in, 30 days or 60 days or 90 days after we ship it, it'll be profitable cash. But we got to the point where we couldn't afford to take an order. And literally, the phone rang, customer called, said, I want to place an order, which normally would be hands up, celebrate. But in this case, I realized, like, oh no, I don't think I used the word oh no, but it was something similar. And I thought, we can't take the order. So without hesitation, I said, okay, no problem. Lovely. This is great. Our terms are 50% down. And they're like, what? We're not going to do that. And I'm like, oh, well, I'm sorry to hear that, but those are our terms. I didn't even hesitate because I had no choice, right? Yeah. So, and they reluctantly paid, as did the next customer. And I kind of forced a matching principle that we will bring in money at the same time we spend the money. And for manufacturing companies, that's hard to do, right? To bring in money at the same time you're spending it, because you kind of have to pay it forward. It's like an investment. Every order is like an investment, and eventually you run out of investment capital. But we forced that issue, and that's the first time I think I got a real life lesson on the value of cash flow and how to manipulate it in a good way. Because I just thought cash flow was like a river flowing by. Sometimes it's raging, sometimes it's a trickle, but I have no control over it. I'm just looking out the window watching this, the river go by. That was the first time I realized I have control. I can tame this river if I wanted to. And that empowered me to make a bunch of other decisions that really helped cash flow. And that was the beginning of the end of our troubles, when we were a younger company. And it just forced me to look differently about managing growth, making sure we have the right types of customers, making sure we don't take on more than we can chew, without finding a way to finance that, hopefully through organic cash flow, not through lines of credit or, whatever, factoring or whatever, all the tricks we used to do. Do you find that you have some of your clients that might be a little too aggressive with wanting to grow or believing that growth solves everything, yet in reality it creates a whole myriad of, unforeseen challenges?
Yeah, for sure. That cash conversion cycle is very tricky, especially when you get into manufacturing, you get into construction industries, things like that, where you're carrying inventory and you have such huge cash outlays to begin with. So that always exists for those type of companies, regardless of if you have your profitability equation figured out. On the services side, so the companies that we help a lot of services companies, and that is a lot of the times growth does help them, assuming we have all the equations below the line figured out. But a lot of times their biggest thing is just more sales. And so they're dealing with a lead flow issue, but that cash flow is a little bit easier to deal with. It's a little bit more predictable. But when you get into, like I said, construction, manufacturing, those type of industries, that it's a whole nother game. It's that you do, like you said, you have to manipulate, you have to figure out how all the levers work. How do we improve things? How do we dial it in to a point where we can keep our vendors happy, we can keep our customers happy, and we're not, paying a bunch of money in interest that we can't recoup on the flip side. What happens if, orders are delayed or shipments are delayed, or inventory, we have to keep track of how much it's growing and shrinking, all that kind of stuff. Because there's there's a lot more holes for the cash to hide in when you have a business like that. So it's definitely challenging, and it's definitely a constant struggle. And so the best thing we can do for that is simplify it and say, okay, what are the levers that we can pull to even make incremental, beneficial changes without upsetting the apple cart? Or do we have to do something, extreme to your point of like, okay, we just have to do 50% down now? We got to that point. But yeah, it's definitely a constant battle, regardless of what stage of the business you're in, what industry you're in. It's a thing that you really have to understand, and you really have to plan out, and you have to stick to that plan. If you're the nice guy and you make exceptions for all your customers, you'll find yourself in trouble as well. But
slippery slope.
It's a slippery slope. Yep.
What are some of the biggest, or actually, what are some of the most common mistakes business owners make when managing cash flow?
Yeah, so I would say that, the couple things I mentioned before, not having data behind it, just using your bank account balance to manage it, not using historical data to figure out, okay, based on the cyclicality of my business or, events that I'm going to project, using that knowledge and sort of, in a go forward basis. I would say not leaving enough margin for unexpected things, because unexpected things will come up, and so you need to plan for that, because everything is not going to go right. So you have to plan a certain amount of leeway for that, and then forecasting it is a big thing. So if you don't have a tool that can forecast that, find a tool, even if it's a Google sheet, figure out a way to forecast your cash, figure out when it's going to be tight, and then figure out those levers like we talked about of what's going to make it better. And from a weekly standpoint, because we typically close books once a month, but from a weekly standpoint, find 2 or 3 KPIs like cash collected. I don't care about what you sold, but how much cash are we collecting? What is our AR balance? What is our on-hand cash balance? And then what are those few sales and conversion metrics that are going to help us predict our future inflows? Just track those on a weekly basis and make someone accountable to those, whether it's you or a salesperson or, manufacturing person, doesn't matter. Make someone accountable to those and track those, and make sure that if it's off, a week or 2 weeks in a row, you're flagging it and you're dealing with it, because that is going to those leading indicators are really going to help you figure out and prevent a lot of the problems that you're going to deal with, on a cash flow standpoint.
What are a few simple financial matrix that entrepreneurs should know if they want to run a healthier business? What are the basics? If they have an instrument panel with 3 dials on it, what should those dials represent?
Yep. So you definitely want to know I don't want to short site marketing, but you definitely need to have a handle on, what's your average job size, what's your lead flow, what's your conversion rate, so you can predict, what business is going to come in the future. But you definitely always want to know your cash balance. You want to know your AR balance, and you want to know how much cash you're collecting each week, specifically from a cash flow standpoint. So those are super duper important metrics. You want to know your gross profit margin, and you want to set things up so that it's actually accurate. So I would say, I'll make up a percent as everyone does, but 90% of the businesses that come in the door don't have their gross margin accurately separated. All their labor is, bundled in the same line item, things like that. So really get your financials in a state where your gross margin is accurate, and really understand that gross margin, which is a lot of times synonymous with contribution margin. But in simple terms, it's, hey, if we grow revenue, how much cash is that going to bring to, how much profit and cash additionally is that going to bring to our business? And so that's a really key metric when you start talking about pricing and discounting, and how do I compensate my sales folks, and if I grow, what does that look like? So those are the big metrics that you really want to understand.
I would guess, you're the expert, but I would just guess based on observation on the other side of the desk, that a lot of entrepreneurs, a lot of founders don't properly segregate variable and fixed expenses. If they are properly segregated, then one can easily see that the more business they bring in, the lower as a percentage, the fixed expenses are, right? They don't
Yep.
all rise, but sometimes they believe everything, the tide raises all ships, but it doesn't. It raises
Right.
variable expenses. So setting up your chart of accounts and everything on the general ledger it is so important. And I didn't realize that in the early days. I mean, I literally, when I first started the business in 1992, it was on a green checkered ledger sheet, and I had debits and credits, and my dad helped me set it up because he knew accounting, and then
Yeah.
eventually, we got an accounting software package and all that. But I still really didn't understand the difference. Everything was just either, everything was an expense or everything was an income. The other things
Right.
that weren't an expense were an income. And it's interesting when you start to drill down and understand it. I find the financials today fascinating because numbers, if they're accurately portrayed, numbers don't lie. We lie to ourselves about the numbers. We interpret it differently, but the numbers. The thing about math, because financials are just math, is math is like a universal truth. 2 + 2 is always 4. It's never going to be 5 or 2 or 1. It's always going to be the same. And sometimes I would look at those numbers as a very inconvenient truth because they're not what I wanted them to say. I wanted 2 + 2 to be 1,000. It wasn't. But I guess that's kind of a challenging part for anyone like yourself that has to go
Yeah.
into a business and talk to a founder and deliver sometimes an inconvenient truth. Is that? Do they ever have a shoot the messenger approach, or do they really, by the time they bring someone like yourself in, do they already realize that they have an issue, or they could have an issue, or they just know they need to reach out to someone more
Yeah.
experienced than themselves?
Yeah, for sure. I would say that I luckily haven't had a shoot the messenger scenario, or at least not very often, not one that I can remember.
Good.
Because there is, I would say, a couple of things that there is an understanding when people come talk to me that there is a problem, right? And so if you wait until you're on your deathbed to go to the doctor, you understand that you're going to get bad news, right? Like
Right.
but you want to know the truth. You want to know the truth at that point so you can deal with it, right? So a lot of people, when we're in that situation, it's like, yeah, just tell me what's going on. But with that said, I also really focus on my bedside manner, so to speak. So I'm always an optimistic sort of person. So I grew up being more the risk averse, pessimistic. What's wrong with this? And I'm trying to. My biggest thing in this business is to balance that with, listen, you're an entrepreneur. You got this far on your own, and that's no easy feat. There's a lot of good things going on. Here's what the good things are. Here's the things that I see are the red flags that we can deal with. But it's not a death sentence. Like, unless you're already out of cash and it's over, there's actions that we can take. There's things that we can learn, and we're going to help you improve, and we're going to help you get back to where you need to be or where you want to grow to. Right. So I'm always, I try to take a balanced approach and, here's the good news. Here's the bad news. Here's my recommendation to where we should go from here. And I think people appreciate that. And the other nice thing about me not being an in-house person is I'm not emotionally tied to it as much.
Right.
I'm not emotionally tied to the business. I'm not a business owner. I'm not an employee of their business. I also am not employed by them, so I don't feel like I have to sugarcoat everything because they might fire me if they don't
Yeah.
like the news that I'm giving them. I
Right.
can separate myself a little bit more from that standpoint. And so bottom line is I think they're open to truths. And I think when I deliver those, I always do it in a way that's, hey, this is not the end of the world. You can't fix a problem unless you know it exists. And I'm going to help you figure out what the solution is. And then even if we have to test a couple different things, or if I know exactly what to do, great. But we're going to see you through this, and we're going to consistently meet, and I'm going to guide you, right? That's where the Copilot comes from, and Cashflow Copilot. It's not a one and done. It's we're going to help you navigate. We're going to be sitting in the seat next to you this entire time, and we're going to constantly course correct. So this is not a death sentence. There's a way out of it, and we've done it before, and we'll do it again.
When I finally had my, what I like to refer to as a burning building moment, meaning, my company was on fire. I'm standing on the window ledge, with either burn in the fire or jump out the window. I reached out to she wouldn't call herself a consultant, but she ended up being more of a mentor category. And the first time she came in and looked at our numbers, she didn't want to look at anything on a computer. She was a paper person. So we had the entire conference room, just a table covered with cash flow statements going back several years, printed out monthly. And she was a little voodoo priestess kind of vibe, meaning she'd put her hands over these numbers and then she's reading them, obviously, and she's moving stuff around. And then at some point, maybe after 20 very, very long minutes, she looked up at me and she goes, "What are you afraid of? I see a lot of fear in these numbers." And I'm just like, oh, what are you talking about? And the point is, she saw trends and emotional reactions in the numbers. That was the only explanation for them. And now, even though I'm much better at looking at financials today, I don't get that vibe from looking at someone's numbers. But she was able to spot very consistent trends that would happen seasonally. Like we don't so much anymore, but we used to have a busy season and a slower season. And she would see, she was able to reconcile certain financial decisions that we made based on the season of our business. And from that, she was able to discern a lot of human emotion in decision making. And I mean, way beyond just, looking at numbers. There was a lot of rationale behind those numbers that she was able to put forward that made a lot of sense to me. For business owners that might be listening or watching this particular episode right now, who feel like they really don't understand their numbers, say the second step is to contact you, but what's the first step that they should take to gain some degree of financial clarity?
Yeah. It's a good question. And to your point about numbers not lying, we always have a saying before I forget how it is: numbers don't lie, but they do need a translator, right? So,
absolutely.
So whether you learn to translate it or, you Google it or whatever, you just got to understand what it's telling you. But definitely the first step is make sure your bookkeeping is in order. Make sure you have accurate, bookkeeping going into place and recording where things are at, because without that, then nothing else works, right? So it's super important. It's not the only thing you need. It's not, the end all be all, but it's the first thing that we have to make sure we clean house, and we have a clear diagnosis, right? So it would be like a doctor, if we use that analogy, reading a blurry X-ray. It's like, well, this doesn't help me tell, like, if something, where it's broken or like what the next best step is. So we have to make sure that everything that's being done is accurate and clear. And then I would just do, if I were them in their shoes, I would just do some basic education and understanding your specific business of where cash moves in and out of the business, what those cycles are, and identify, are there things in our past where we've made decisions that, have hurt us, have helped us? Let's learn from that. But let's just really understand the high level, sales trajectory, revenue trajectory, and cash trajectory, and understand how those play together, just from a basic level, right? And there's a lot of education out there. We're creating a course that we're going to be launching in a few months, but there's all kinds of stuff out there just to help you with those basics. But no matter how much you go back to that principle I said before, where you're putting the right people in the right seats, you still, as a business owner, have a responsibility, in my opinion, to understand the financials to a certain degree, because it's your business and nobody should care about it more than you do. So you need to understand how it operates, what the financial statements mean. So if you don't know what all three of them mean, make sure you understand what all three of them mean and how they tie together, and at least the very high level story of what they're trying to tell you. You don't need to understand accrual, cash, like all the journal entries. You don't need to understand all that, but make sure the books are in order make sure you look at, let's say you're trailing 12 months by month, and just understand your business from a high level and the movements there. And that's gonna be key. Whether you're working with someone else or not, you have to have that basic understanding. And then if you're still at a point where you're like, I don't get it, or like what I'm doing is not working, then we're here for that. But either way, I want to educate people. I want them to be at a certain point about their own business, because I think that's only smart. And you are the fiduciary of your business, and financials are a big part of that. So
yeah, very good. I only have one more question because we're about out of time. How did you define success before you got into entrepreneurship, and how do you define it now?
That's a great question. I would say, before I got into entrepreneurship, it was very much how I was raised, where it's you get good grades, you get a good education, you land a good job, you have a family, you live in a big house or whatever,
check. Yeah.
Check, the American dream, you got, 2-car garage, whatever. And so I didn't really, it didn't resonate with me, I guess, as much, because I never knew what I wanted, and I didn't feel like I wanted to live just the standard life. But success now to me, is unleashing my full potential and figuring out what I have to give and what I'm interested in, and pursuing it, and not being limited by my own fears, my own hesitations, or negative talk about, you can't do this, can't do that. And it's not in an arrogant way, but it's more like, hey, if there's an unopened door in your life, like let's open it, and let's see if it's something we want to pursue or learn about. But just figuring out how to tap into all of my untapped potential, and then how do I make the people around me better because of that? So how can I serve people to help them with the things that they might not have untapped potential in the same skill area or area that I do, so I can still bless them and help them with that, and help them tap into other things that they have that I don't have. But how do we help the community around us and everybody else that we interact with succeed? And so that's my biggest thing now, is just helping everybody understand this gargantuan thing of financials better, and just make them more confident, give them a better life, and just again try to raise as many ships around me as I can. And so that's really what's intrinsically motivating, and gets me up every day, and solving problems. Like, I just love solving puzzles, I love solving problems. And so being able to do that day by day is those little successes that lead me to feeling I'm contributing to a greater good. So
excellent. Well, you definitely are. For my audience who would like to get more information on Cashflow Copilot and Justin's company in general, if you're watching this on YouTube, right down here, right down there where it says see more, there's information on how to get a hold of Justin through his company there. If you're listening to this on your favorite podcast app, don't do it while you're driving. We don't want to lose any subscribers. We need all of them we can get. So stay alive, and when you get to your destination, look at your podcast app and look at the show notes, and information on Cashflow Copilot will be right there. Justin, thank you so much. I wish I knew you 34 years ago when I started the company. You would have saved me a little bit of heartache. I think it aged me a few years, that whole stress. But everyone goes through it. We learn it the hard way or the easy way. And I think my experience with business and business owners is cash flow is the number one challenge. I mean, well beyond the designing the product or the service, well beyond employees, well beyond so many of the challenges that an entrepreneur faces on a daily basis. Cash flow it seems to be at the very, very top of the list. Everything can be going smoothly. Cash flow is like the giant buzzkill that keeps us all awake at night. And if that can be realized early and managed early, I think that 80% of business startups that ultimately fail can be turned around if we just get an understanding of that before it's too late. So Justin, thanks for doing what you do. It's a noble cause. You're saving your fellow business person in many cases. So I appreciate what you do, and I'll just wish you continued success along the way.
I appreciate it. Yeah, and thanks for having me on. It was a ton of fun. It was a great conversation, and yeah, I would do it again.
And it goes by like that, right?
It does. It goes fast. Yeah.
Yeah. There's time and there's podcast time. So thanks, Justin. I really appreciate your knowledge and sharing it with me and the generosity of your time.
All right. Thank you.
Okay, real quick, here's some final thoughts. One of the most common traits I see among successful entrepreneurs is that they eventually learn to face the numbers instead of avoiding them. Financial data isn't just about accounting. It's about understanding the story your business is telling you and using that information to make better decisions. Now, that's a wrap. Thanks for being part of our Reluctant Entrepreneur family. We've been very busy recording conversations with fascinating guests and creating new original programs. So be sure to subscribe or follow the show, and don't forget to turn on notifications. That way, you'll know whenever a new episode or video is released. If you're an entrepreneur or if you know someone who would make a great guest, we'd love to hear from you. Visit reluctantentrepreneur.podcast.com, where you can apply to be a guest, recommend someone for the show, or just learn more about the program. The Reluctant Entrepreneur has also grown beyond just our guest interviews. Now you'll find several different series under the Reluctant Entrepreneur brand, each exploring business and entrepreneurship from a different perspective. On Reluctant Lessons, when businesses go wrong, we dig into high-profile business failures, examine the decisions that led to their downfall, and uncover lessons today's entrepreneurs can use to avoid making the same mistakes. We've already profiled many well-known companies with many more on the way. As it turns out, there's no shortage of material. And then there's Lessons from a Reluctant Entrepreneur, which brings valuable stories and insights from my book to life. These episodes explore some of the experiences, mistakes, surprises, and hard-earned lessons that shaped my entrepreneurial journey. And on Mike's Musings, I share my perspective on a variety of business topics, drawing on 34 years of experience as an entrepreneur and business owner. These are candid observations and practical lessons about leadership, marketing, decision-making, business ownership, and the realities of entrepreneurship. Whatever series you choose, the mission is the same: to share honest stories, practical advice, and lessons that can help you build a stronger business and become, hopefully, a better entrepreneur. And if you're interested in my book, The Reluctant Entrepreneur, Anatomy of a Business Startup from Uncertainty to Unstoppable, it's available in paperback and Kindle on Amazon, and as an audiobook on both Audible and Amazon. And finally, to everyone listening or watching, if you find yourself stepping into entrepreneurship, whether by choice or by circumstance, remember this: sometimes the path we never planned becomes the journey we were meant to take. All right, that's me. I'm out of time. Thank you so much for being here. I truly appreciate you, and I'll see you again soon.